Thank you all for taking time out of your busy schedules today. Today we're announcing the third quarter business results. The agenda is as shown, so I'll get started right away. First is the executive summary of Q3, covering July to September. The overall results are as shown on the slide. There were fluctuations in profit, but the area most impacted was internet infrastructure, in which profit nearly doubled compared to last year. The online securities market had a rough time this past quarter, but I think we had steady results considering. The following is a report by segment. In internet infrastructure, net sales and profit were both up, and broke the previous record set from April to June. In addition to this strong momentum, we had the launch of .shop, followed by new SSL services. In online securities, revenue and profit were both down. Trading volume fell because of unfavorable external factors, but we were able to bring in a steady level of profit due to cost advantages. In online advertising and media, net sales and net profit grew. The results of our efforts last year to utilize more ad technology are beginning to show in the numbers. Our goal is to improve profit levels by increasing the ratio of in-house products. For mobile entertainment, although net sales have been decreasing, we're closing the deficit gap and are currently preparing to release new titles next quarter. We remain committed to strengthening our strengths and reinforcing weaker segments with number one products. Next is the summary of the financial results from January to September. Net sales and operating profit both broke previous records. Ordinary profit decreased due to fluctuations in the currency rate. For net profit, we experienced one-time profit last year from the sale of GMO Holdings shares. Moving on to progress made towards our yearly forecast, we are well on our way to achieving our forecasts for the 7th consecutive year. Next is the summary of Q3 business results. The following slide shows quarterly earnings. Net sales and operating profit are up year on year. As for net sales, on the segment level, you can see that the volatility in securities, seasonal factors influencing advertising and media, and recurring revenue in internet infrastructure all add up to steady growth. Moving on to profit. Internet infrastructure doubled year on year and drove overall earnings. Here you can see an overview of profit and loss from January to September. The causes of major changes are listed on the right. Next is a summary of the balance sheet. As online securities had a large impact on overall figures, GMO Holdings' balance sheet is shown on the right. Interest-bearing debts increased, but that was due to the expansion of customer assets in internet securities, and so is temporary. And although shareholders' equity was down slightly, it stems from us executing share buyback, so this is not a concern financially. Next, this slide shows the market and equity shares for group companies. Next is the consolidated cash flow from January to September. Operating cash flow was negative for two reasons. Customer assets grew in online securities, and our corporate taxes increased due to higher profit levels last year. This diagram shows the four GMO Internet Group business segments. From the upper left-hand corner, you can see Internet Infrastructure, Online Advertising and Media, Internet Securities, and Mobile Entertainment. Our customer base is expanding across all segments, with growth in Internet Infrastructure contracts, active users in media, and customer accounts and securities. As of the end of September, our group totaled 5,156 staff, with 43.9% being engineers or creators. We are currently working towards increasing this ratio of people who create to be more than 50%. I'll move on next to the segment reports. This slide shows the makeup of the Internet Infrastructure segment. All of the products in this segment are a strong number one in their respective markets. This slide shows historical performance by quarter. Orange represents strategic investments. Profit grew 95.1% compared to last year, almost doubling, building on our already strong momentum, in addition to one-time profit from SSL and from the launch of .shop and its initial sales. I am sure you can sense the strength of the Internet Infrastructure segment. This graph shows a breakdown of quarterly net sales by subsegment. The product's recurring revenue totaled up to reach a record high of 16.5 billion yen. The number of contracts in the Internet Infrastructure segment reached 8.39 million. Since the KPI for MINE is transaction volume, those figures are not included in the contract total. Moving on next to online securities. As you can see on the slide, revenue and profit went down. This large decrease was caused mainly by the after effects of Brexit last quarter. Despite the transaction volume decrease caused by external factors, we maintained a higher profit level than other companies because of our optimal coverage ability. This slide shows performance trends in our group's FX market share. Although our transaction volume decreased, our group's overall share increased. Shown here are GMO Click Holdings' major KPIs. For the past 4 years, we've achieved the highest FX trading volume globally. Our system planning, development, maintenance, and operations are all handled in-house so that we can respond flexibly to changes in the environment. So we have a strong system in place that's able to secure profit. We will continue to focus on expanding our customer base and improving our services. I would like to share about 2 updates related to GMO Click Securities. First is the addition of a stock lending service. We are expanding our products to meet customers' needs related to the higher level of interest associated with stock lending through stock bonuses, and the combined use with or utilization of margin accounts. The second announcement is about the launch of a new loan-based crowdfunding service in conjunction with Maneo. This is the revolutionary investment product that allows investors to lend funds to startup companies and then receive a share of the profits. Our aim is to provide cutting-edge and user-friendly transaction-related products. Moving on to the online advertising and media segment. This graph shows historical performance by quarter. Both revenue and profit increased year on year. We've been explaining the results of our efforts to shift to using more ad technology since last year in a qualitative fashion. But the results of those efforts are finally visible in the figures. We remain committed to increasing our in-house product ratio and improving profitability. Moving on to the quarterly net sales by segment. Online advertising had favorable growth due to their focus on in-house products. This slide shows a summary of Q3 for our listed companies related to online advertising and media. GMO Ad Partners grew in revenue and profit. Investing in recruitment last year produced good results, and the advertising agency had strong results as well. Our in-feed advertising service Akane is also making a name for itself. Akane is one of our in-house products. GMO Tech continued its structural reform after changes in the market. One of their strengths is their expertise in in-house development, and there is currently no change in basing growth on that ability. GMO Research had an increase in both revenue and profit based on research both inside and outside Japan, and profit from advertising is also increasing steadily. GMO Media experienced gains in revenue and profit, with the transaction volume of their e-commerce media Point Town growing steadily. Last is mobile entertainment. This graph shows quarterly consolidated earnings. While the trend of revenue from current titles decreasing continues, losses are decreasing as we bring costs under control. We are continuing to develop new titles that we plan on releasing next year. Next, I'd like to share about our group strategy. First, I'll share about Minne. The number of sellers and products is steady. This graph shows quarterly trends in transaction volume. From July to September, it totaled 2.06 billion yen. So we've achieved around 6 billion of our 10 billion yen target for the year. We were able to secure 2 billion yen this past quarter, even after going light on promotions. I'd like everyone to take particular notice that there was no decrease in transaction volume despite fewer promotions. We are taking measures internally to prepare for the end-of-the-year shopping season. To explain a bit further about those measures, for example, we began a new sales promotion by offering coupons to help boost first-time purchases, as well as to encourage repeat customers. By adding Apple Pay and becoming one of their partners from the beginning, adding mobile payment options for Docomo and au, and by adding a guest payment feature, we're creating an even more buyer-friendly environment. We're improving other various KPIs, maximizing promotion results, and increasing transaction volume to make Minne one of Pepabo's main products. To explain Minne's current status in one word, I would say it's now like a straw basket. We want to take the next few months to patch up a few holes so that we can maximize the effectiveness of promotions. We've done a lot of promotions over the past year, and we want to strive for even better results that are more cost-effective, so that next year we can do things on an even bigger scale. Next are the latest developments in finance and payment. Each area is continuing to progress steadily. In the payment area, SMBC GMO Payment exceeded the expected number of contracts and has been operating steadily since its open. In securities, we are continuing to make progress in our collaborative new product with Daiwa Securities. For the net bank, we're working together with Aozora Bank to get even closer to beginning operations. You can see the timeline for the bank project on the next slide. We had a meeting earlier today, and things are moving along nicely. We are currently deciding system and business structures to begin for the more detailed phase of development. I can't go into detail, but we are utilizing Aozora Bank's financial expertise and combining that with our group's overall and technological strengths to make a new net bank that's user-friendly, convenient, and that has competitive banking fees. Next is an update on .shop, which has been gaining a lot of attention recently. .shop is on sale now, and just like all other new domains, it went through 3 sales phases. It's currently in the general availability phase, as shown on the far right. In all the phases, .shop broke the previously held records set by other companies, setting things off to a great start. As I mentioned earlier, preliminary surveys showed that .shop held the #1 potential, and I think those predictions were proved right with these figures. Next is its impact on net sales in Q3. The total earned from trademark holders and through the early access phase adds up to 270 million yen. These figures only reflect sales made during Q3. For general registrations and domains using premium character strings, payments are spread out over the year-long contract. Payments are made in 12ths, with a portion being paid each month. Q3 only includes the first month's payments, which had sales totaling 30 billion yen. That might not seem like a lot of money, but sales made each month from new registrations will continue to accumulate, making this a source of ongoing recurring revenue. The figures that were just shown are a breakdown of sales made during Q3. Next, I'd like to explain about .shop going forward, including how we plan to allocate future revenue. First is an image of how we plan to expand the .shop brand. As I mentioned earlier, the domain had a strong launch. Now we're taking measures to help bolster further sales. Regions are listed vertically, while services are shown horizontally. The domestic focus for .shop, shown at the bottom left, is to make it a de facto standard. Our current marketing strategy is to make it a given that, if you want to start an e-commerce website, the domain to use is .shop. We're working hard to make .shop the de facto standard for e-commerce sites. We already possess more than 90% of the domain shares domestically, and we plan to continue progressing steadily in that area. The upper left shows our focus for overseas operations, which is to partner with local registrars. By registrars, I mean local companies that sell domains, like us. I'll explain that point in more detail momentarily. The bottom right shows potential tie-ups for .shop with other services, leading to the cross-selling of products. We announced the launch of the first tie-up, SSL, earlier today at 3 p.m. The point is that .shop's profitability exceeds 90%, which means that we can take advantage of a flexible pricing strategy. Our goal is to maximize the group's revenue by utilizing not only .shop, but also .shop-related products. What you're looking at now is based off of the upper left section shown in the previous slide about overseas operations, which is about enhancing our relationships with local registrars in each country. The number of domain registrations is off to a strong start. As of yesterday, there have been over 89,000 registrations placed so far. Although we just started, an important point is how much .shop domains will be prioritized by users overseas based on our connections with registrars in each country. Put simply, it's about how many times .shop ads are clicked on and how much the domain is searched for from these resellers' websites' main pages. Because domain pricing fluctuates, we started by offering the domain at a discounted price for the first year. As a result, the number of contracts has more than doubled. We've also begun multiple campaigns overseas. We expect to surpass 100,000 registrations easily by the end of the year. We'll continue to do aggressive promotions to see those figures rise even more. We're developing a product that only GMO Internet could, and it can't be copied. We began the .shop-centered cross-selling series by announcing the new SSL service today. Services are scheduled to begin by the end of November. We plan on offering a free year of the SSL service with .shop domain purchases. SSL verification is a vital service for any online shop operators who collect customers' personal information or credit card data. In addition, our wholesale-level domain registry, along with any other certification authority, has very high standards for being approved. And we're one of the few companies that can certify others, making this a valuable product combination that we alone can offer. I keep repeating myself, but .shop and SSL are a combination that no one else can copy, making us the only ones able to offer them. Hypothetically, if two copies of the same domain appeared, it would cause confusion, and no one would know which website to look at. Registry businesses have to meet very high standards to be able to operate. We solely operate .shop, and there aren't that many registries even on a global level. As a matter of fact, in Japan, the only two active businesses are us and JPRS, who operates .jp domains. As for SSL, whenever you view a web page, there's a key icon shown in the upper left-hand corner of the screen, or at the bottom left along with the URL. This is the SSL. This technology encrypts all the data exchanged between the website and your browser, as well as the related servers. For example, I know a lot of us use Wikipedia on a daily basis. We are the ones who secure this website, and if you click on the key icon in the corner of the page, you'll see GMO listed there. And Wikipedia is just one example, but Google is also pushing SSL, saying it should be used by websites worldwide. Because Google is pushing this service to its web developers, SSL has begun to grow rapidly. SSL is a given on e-commerce websites, and if such a site doesn't have SSL, users don't feel comfortable giving their credit card information and can't be sure if their order was placed correctly. That's why SSL is a must for e-commerce websites. Even regular websites incorporate SSL, so almost 100% of e-commerce sites currently do as well. Anyone registering a .shop domain will need to incorporate SSL onto their website, and this unique product combination is sure to create great synergy. This is a top-notch business model as it contributes to the safe expansion of the Internet. So I'd like everyone to keep watching these services as they develop. Next, I'd like to show a chart mapping .shop's projected sales. For the ARPU, we're aiming to get a large number of registrations by offering the domain at a strategically discounted rate for the first year. The typical marketing style for domain businesses is to offer the first year of service at a low price and then begin profiting from the renewal fees later. We also plan on charging the normal amount for renewals from the second year. As for the number of registrations, the graph in the middle shows projected registrations if they continue to increase at the current rate. A fraction of the customers will discontinue service usage after a year, which would create the trend shown. As for the renewal rate, VeriSign published the figures for .com, which state that 70% of domains are renewed. Since .shop is a special type of domain, I expect renewal rates will be a bit higher. If we continue the current level of marketing, things should increase as shown. And by improving registration and renewal rates, I'm sure we'll see these figures continue to grow. And the sales resulting from these registrations are shown on the far right. As renewal fees come more into play, we expect revenue to increase drastically from the end of next fiscal year. Domains are a product that after you buy once, you usually continue to use. And by continuing to increase awareness levels about .shop, I'm very expectant that the number of registrations will continue to increase as well as revenue over the midterm. To go a bit deeper, as I explained earlier, the domain business works off of the model of selling domains at a discounted rate the first year, and then gaining from the renewal fees. As far as the number of registrations, there is a constant level of cancellations during the first and second year. For .com, 70 to 80% of domains are renewed, while 20 to 30 are not. The rate of cancellations after the second year gets even lower. Most occur after the first year, and after the second year, 90% of domains are renewed. The relation between cancellations and renewals is that when you sell domains at too much of a discount, customers buy in bulk, and then the chance of cancellations increases. The opposite correlation in marketing is that if the price is higher, then fewer are sold, but in the end there are also fewer cancellations. As for pricing, the fees for this first year are discounted, so when standard pricing kicks in from the second year, the number of renewed domains times the regular domain price leads to quite an increase in sales. And on top of that, there are always new domain registrations coming in. So this business structure lays out the revenue over a period of 2 to 3 years. As soon as we understand more about the related KPIs, I will be sure to share the details of our findings with you all. That's all for .shop. I keep repeating myself, but to summarize my thoughts on .shop, I just want to emphasize that my belief in how strong this product is has not changed, and marketing to the overseas market is about to take off. As for global sales, we have not begun selling this domain in China yet, but we have plans to launch sales in January. Actually, the potential market in China is huge and buzzing, but because of the licensing process, we will begin sales in January. Hence, the current figures exclude registrations from China. Building off of our success in Japan, we want to team up with local registrars in each country to see e-commerce sites worldwide operate safely on secure domains and to help support a high level of information sharing, so please look forward to the results. Next, I'd like to share about our global activities. GMO Internet Group operates from 60 locations in 18 countries, and just this quarter we surpassed having 1,000 global staff. Out of 5,100 people, 1,100 are operating outside of Japan. This year, we are specifically concentrating on expanding business into Southeast Asia. We currently have businesses set up in 7 countries throughout Southeast Asia that are run by 755 staff, making 80% of our global staff stationed in this region. We have been expanding rapidly by making various business and capital alliances. GMOZ.com Net Design in Thailand is an independent internet company and is one of the top domestic holders of domain, hosting, and cart product sales related shares. .shop sales are doing well, and Southeast Asia is an area where internet infrastructure is growing rapidly, so we are expectant about the results of our endeavors there. Additionally, GMO Payment Gateway began a business and capital alliance with Malaysia-based Macro Kiosk. It's one of the largest SMS payment service providers, as it offers mobile banking system services to major banks throughout Asia and has a total of 250 staff. We believe they will be a powerful partner for our payment business going forward. Global sales this past quarter came to 1.6 billion yen, making up approximately 5% of overall sales. Out of over 30 billion yen in net sales, global sales still make up only 5% of the total, but with the launch of .shop in September, that ratio is beginning to increase. Our goal is to make global sales account for 50% of total sales, so we will keep pushing both our domestic and global businesses. Moving on to shareholder returns. We will continue to invest in corporate growth as needed, but with the objective of providing greater returns to shareholders. As shown, there is no change in this policy. And finally, just a quick summary. We began our internet infrastructure business 21 years ago, and I still feel the importance of creating businesses we can't do without. Few business groups offer multiple wholesale products like .shop and SSL. Actually, we're the only such group. Our plan is to concentrate our resources on providing internet-related services that can't be copied by anyone else, and to be a business group that adds even more value to the internet. Second is the much-anticipated .shop. The preliminary rankings didn't disappoint, and I'm very glad that this new domain is off to a great start. It's been 40 days since general availability began, and we've been accumulating and analyzing data daily from around the globe. But no other product comes close to its price elasticity or its ability to garner so much attention. Through further marketing and teaming up with registrars worldwide, we hope to see .shop become a domain that's recognizable, well-known, and able to expand sales. Third is the area of fintech, which I believe will be crucial to our group's next level of growth in the mid to long term. For our corporate and individual customers in the areas of infrastructure and securities, our aim is not only to make services user-friendly, but to use our technological prowess to create even more innovative businesses we can't do without. That concludes today's quarterly results presentation and explanation about our business strategy going forward. Thank you all for taking the time to come today. Internet for everyone.